Cern Basher has been uploading so much stuff to X, and I've almost had a chance to read some of it and get through some of it. I just am curious to know what he's going to be showing us today. So, Cern Basher, glad to have you on board.
Um, I was going to say welcome back, Randy, but it's your channel, so I guess thank you. Thank you for having me back.
There you go.
Sometimes I feel like I've just kind of taken over your channel when I come on.
Yeah, it's okay. I'll give
Yeah.
I'll give you the weekends.
And I'm glad that you don't have any regrets because you keep having me back on, so something must be okay.
It's true. It's true.
Well, today's going to be another fun one.
Okay.
Yep. But first of all, I think congratulations are in order. I hear you've become a grandparent for the 10th time.
Again, 10 times. Yeah. So math is still not an issue because I can, as you pointed out, I can still count them all on two hands. So
Just don't lose a finger along the way.
yes,
It's to stay away from table saws, Randy.
I've been good at that for
That's good.
far ever since I left my original home. My dad was a handyman. I'm not.
Well, as you know, we have the obligatory Cybertruck photos in
Absolutely.
my slides. So let's get them out of the way right from the start because we've got some great stuff coming up. This is actually my shot from downtown Sarasota,
Okay.
near the corner of Pineapple and Orange Streets.
Okay.
Seems fitting, doesn't it, for streets in Florida?
Oh yeah, we have orange and Riverside, which is where oranges originated in the United States. We have orange and lemon and all the rest. Yeah. Mhm.
Yeah. Yeah, we have a few of those street names here too. So I thought that this mural was built for the Cybertruck with the way that they angled the camera
Yeah, that's great.
on the wall. It almost fits perfectly underneath there. It's not quite the right angle, but very close.
And it's pretty funny taking a picture of the Cybertruck. That's great. I love it.
That's right. That's right. It's been there for a few years. They were anticipating the Cybertruck coming
Yes.
along.
Yes.
They also had some chalk festival, I think it was last weekend. And so we found some of the remnants of that on the streets. I guess it hasn't rained since then.
Right.
But I took the opportunity to take a few shots here and there. So all right, so that's the obligatory Cybertruck
Okay.
photos.
Okay. All right. Okay.
Randy, I have some bad news for you.
Uh-oh.
It appears that Toyota is finally going all in on EVs.
Toyota is.
Did you
Wow.
hear that?
No, I hadn't heard that.
And I have
Breaking
an
news.
image of their latest model. Are you ready for this?
I'm ready. I'm ready.
Here it is. Fully electric.
Oh,
They finally realized
yeah,
the error in their ways.
they're joining it. Okay.
Yeah, a gasoline powered sewing machine just doesn't cut it.
Glad to hear it. It's
All
good.
right. All right. The fun and shenanigans out of the way. Let's get down to serious business.
Okay. Okay.
Last time I was on the show, we talked about Gary Black's valuation model,
Right.
and you were asking sort of about sort of valuation in general.
So did Gary unblock you after that show?
No,
Okay. Okay.
no, that's okay. That's okay. I'm not waiting for that. That's all right. Um, so here's an example. Let's kind of go through a couple of examples here to kind of maybe help your viewers understand valuation a little bit deeper.
Sure.
So if I'm an analyst, I might be making earnings estimates for a company for a period of time.
Sure.
And in this particular hypothetical example, you can see earnings estimates for whatever company you want to think it is for the next 11 years.
Mm-hmm.
Okay?
Mm-hmm.
Now, if the company was only around for 11 years, right? Let's say in 2036, the company wraps up operations and is done.
Okay.
Then here are the earnings as a percentage of the present value of the numbers on the previous page.
Mm-hmm.
So the first year earnings, which was $3.61, that accounts for 6.2% of the company's present value.
Right.
Okay. And then as you go out, some of the other years are closer to 10%. And you can see the last one, 2035, is actually lower than the numbers in 2032 and 2033.
Mm-hmm. Mm-hmm.
because the present value calculation is discounting those future earnings back to the present, and therefore the earnings in the out years are actually worth a little bit less than the earnings in those middle years.
Right.
Okay. Now, it depends on your discount rate. It depends on the growth rate. It depends on all kinds of assumptions. But you can see here, there's no terminal value in this model.
Right.
Right. And what a terminal value means is it's all the earnings beyond 2035.
Mm-hmm.
Okay. And most analysts, will model out 5 to 10 years of earnings, and then they'll apply some kind of terminal value to it. Now, your question was, well, what's a typical terminal value as a percentage of the present value?
Yeah.
I believe you articulated that just as precisely as I said it.
Yes.
So here's the answer to your question. All right. For this example, and it's funny, our images have blocked my view on the screen. There we go. I can see now. In this example, if we assume that this company, with the earnings profile that I just showed,
Mm-hmm.
was going to grow earnings into perpetuity by 5% per year,
Okay.
then the terminal value would represent about 1/3 of the company's total present value.
Hmm.
Okay. That's using a discount rate of 14%,
Okay.
which is kind of high, frankly, but we'll stick with that. Okay. Now, let's assume the company can grow its earnings by 10% instead of 5%.
Right.
What percent do you think the terminal value accounts for its present value at that point?
Maybe 50?
Randy, I think you're good at this game. 49.9. You're close.
Yeah,
I
yeah.
think I'll give you credit for that.
Yeah, yeah.
Okay.
I've been never mind.
And by the way, viewers, Randy has not seen these slides. He is just that smart. Okay, Randy, next question. Now this is double or nothing on this one.
Okay, okay.
Now we're going to increase the earnings for the terminal value 2035, 2036 and beyond from 10% to 15% per year in perpetuity. What percent is the terminal value in that scenario?
62.5.
Now you're getting too clever. It's only 60.
Ah,
Okay. Final
yep.
question.
Okay.
Okay. This is for the prize. Let's assume now that the earnings growth in perpetuity is as high as 20%, which is pretty high, right? What percent of the terminal value of the present value is it now?
67.
You are amazing at this game, Randy,
I have,
right?
yeah.
You seem to have a very good intuitive sense of these things.
Well, yeah, yeah. There's extrapolation is, there's a method to my madness, and it was almost right.
There's a madness to your method as well, as I've been accused of many times.
Right.
But one of the things here that is instructive is, let's say that we look at this company where the earnings are growing 20% into perpetuity. Maybe that's crazy high for any company, but let's just assume that this is possible.
Sure.
What makes it very clear is that the earnings in the first few years actually account for very little of the valuation of the company.
Right.
And this is why I sort of say I don't really care about quarterly earnings for Tesla or any other company, because it really matters little in terms of the value to the company. 1/4 might be 0.5% of the company's total future value
Right.
in present value terms. So I try to put, quarters in their proper context, right? But a lot of Wall Street freaks out when a company misses quarterly earnings.
Yes.
And you'll see the stock drop by a lot sometimes just because they missed 1/4. And that sometimes can be a great opportunity.
Yeah, and it would also depend on where you put this perpetuity line, right? So if you do it after 5 years, it dramatically changes things. If you put it after 20 years, it would dramatically change things. So that's another issue.
I think it is very difficult to model earnings out any much beyond 10 years. Even then, that's probably a stretch for most companies, depending on the company.
Right.
Right. Like a company like Coca-Cola, where its earnings are pretty steady and trends are pretty stable, that's not so difficult. But a company like, NVIDIA or even Tesla, it is a challenge.
Very challenging. It's challenging. We've looked at 2026, and so far, AJ and I have commiserated about it. And even looking at 2026, it's like, what are they even going to charge for an Optimus? What's the
Yeah.
margin going to be? Is it going to be rented or is it going to be sold? How many will they sell the first year? I mean, if you know those three things, now you have at least a chance to get somewhere close to what earnings might look like in 2026. Then you got the same problem with Robotaxi. Have the same problem with FSD. Are they going to raise the price of FSD to 20,000? Anyway, you get my point.
I do. And so what we need is a crystal ball.
That's right.
And I have one.
Oh, really?
Well, I went searching for one. So this gentleman said, to invest or not invest in Tesla, is it too late? Should I hold out for a sale that may never come? All these questions and more will be revealed in Cern Basher's brilliant Tesla modeling, the crystal ball of the stock market, he proclaims. So I had to respond to this, and I said, I've climbed 𝐂𝐚𝐿imanjaro, I've climbed Mount Fuji, I've hiked and climbed mountains in Nepal, New Zealand, Argentina, Ecuador, and the Canadian Rockies. I failed to find a crystal ball, so I built a spreadsheet instead.
Yes, you've claimed all those places, huh?
I have. Now,
Wow.
all joking aside, I'm actually kind of serious with this comment.
Okay.
And the reason is that we don't need to know the future precisely, but we can still model it in a way that's helpful.
Yes.
Okay. And so what we're actually going to do today, and we're going to complete it tomorrow. This is actually a two-part show, Randy, whether you knew this
Okay.
or not.
Yeah.
Okay.
Yep.
Randy has to have me back tomorrow. This is my way of ensuring that he has me back. We're going to deploy my probabilistic valuation technique,
Nice.
but we're going to use your inputs.
Oh,
Okay.
okay.
Now, before we do that, let me kind of show you an example of what I mean. All right. Here is kind of an output of the analysis. Last week, I appeared on Brighter with Herbert, and I went through my model. And on this table, that's represented by what I'm calling full Cern,
Okay.
where I'm taking my estimates for autos, energy storage, service and other, and Tesla's future businesses such as Robotaxi, Optimus, Autobidder. Well, Autobidder already exists, but most of it's coming in the future.
Right.
And then potential business for AI inference.
Okay.
And I'm assigning 100% probability to my own estimates.
Okay.
And when I do that, I get a present value for Tesla today of $3,405 per share.
A present value.
Present value.
Wow. Holy cow.
I'm calling that full Cern.
Full Cern. That's assuming out to your 10 years or whatever, and then some kind of an infinite value. What did you call it? Terminal value.
Yeah,
That would back into $3,400 right now.
that's right.
Yep. Okay.
Now, the half Cern
Yep.
is 50% of everything I modeled.
Right.
And basically the way to interpret this is to say, okay, there's a 50% probability that Cern's right, and there's a 50% probability that he's wrong. Or I'm only willing to take 50% of what Cern has modeled as possible,
Right.
depending on how you want to couch it. It's different ways of looking at it. In terms of Optimus, you could say 50% chance of happening or 50% chance of not happening.
Or it could be a 70% chance of it being more than and a 30% chance of it being less than or something like that.
Something like that. But right now, I've kind of got it all or nothing.
Right.
It's either Cern or not Cern.
That's right.
So that's the half Cern in that case. And so then you get a present value of about $1,700.
Mhm.
Present value discounted
Present
to
value.
today.
Yes. Right.
Not a price target, the present value
Present
today.
value. Yep.
Okay. We can also use the model to back into what the market's assumptions might be using my model as a baseline.
Oh, yeah.
So the middle one there, it's labeled as current price. If Tesla is around $330 a share, give or take,
Mhm.
the current price, one way to interpret that is 110% of what I modeled for autos, 125% of what I modeled for energy storage, 110% for services and other, a 5% chance at Robotaxi, 0% for Optimus,
I see.
25 for Autobidder, and 15% for AI inference.
Okay. That would be one way.
That would be one way.
You could do it many different ways, but that would be one
There's
way.
an infinite number of
Right.
combinations here
Yes.
to arrive at the current price.
Yes.
Okay.
Yep.
You could also use the model to say, okay, for somebody that has a $400 price target,
Okay.
what would CERN's model need to be in order to reach 400 as a present value? And so in this case, 100% autos, 100% energy, only 75% of what I modeled for service and other, 5% robotaxi, 5% Optimus, and 15 in the other two. Right. And then if you go to 500, well, that's bumping up Optimus and robotaxi from 5 to 8%.
From 5 to 8.
Right. An extra $100 in
Sure.
present value per share.
Sure.
So trying to show you here how sensitive the model is to different assumptions.
Mm-hmm.
But the problem with it is they're my assumptions, not yours.
Okay.
So what I want to do is take your estimates.
I see.
I'm going to work overnight tonight. I'm not going to sleep tonight. I'm going to crank through my model. And tomorrow I'm going to come back and present to you the results of your model, Randy.
I see how it looks
Okay?
in your analysis.
Using my framework. Sound good?
Okay. All right. We'll do that.
All right. So as a little bit of a further prelude to all that, let me just go through a couple of other things.
Okay.
All right. You're familiar with this?
Yes.
Dave Lee's great depiction of the growth waves, the S-curves of technology adoption. And we've identified at least 4 that Tesla is on,
Right.
probably more. EVs, FSD, robotaxi, energy, and AI robots, humanoid robots.
Right.
Now, as Dave Lee said, this isn't really to scale, like this is just a depiction.
Mm-hmm.
But I made an attempt to
Put it
make actual numbers around this, so it's not just a stylized version, but how it actually might look. Now, I purposely left off the numbers here on the left side, but I want to show your viewers visually what I think could happen. Again, based on my assumptions, and we'll see how this chart looks tomorrow with your assumptions.
I see. Okay.
Okay, we'll see if it's similar or different.
Right.
But I am suggesting that in 2026, we start to see a material impact to Tesla's valuation based on robotaxi and Optimus,
Mm-hmm.
and certainly by 2027.
Mm-hmm. Mm-hmm.
Okay, so much so that those two businesses are going to be as big each as autos and energy are today in terms of the valuation impact of Tesla.
Right.
Okay. Now, fast forward to 2030, and suddenly the legacy businesses, you can barely see them
Right.
as far as their valuation impact.
Yeah.
Not suggesting they're going away. In fact, they're growing quite nicely.
Yes.
But from a valuation impact, this point they will not matter. It's
Right.
the Amazon as a book company situation.
Right.
How many books Amazon sells will not matter. How many vehicles Tesla sells will not matter by 2030.
Sure.
Okay. You can keep track of it if you want, but it's not going to matter.
Right.
And then by 2035, the transformation is so complete that really all that matters at that point is Optimus.
Is that when each of us will have our own Optimus?
No, because only 200 million in my assumption, in my model,
Oh,
I've only got 208 million Optimi in the world at that point.
I see. Okay.
And that's not enough for everybody, Randy.
Oh, no.
Yeah. Okay. By the way, somebody took my chart and added this helpful annotation to it as a reminder. I think actually you want to move that arrow a little bit more to the right, but that's okay. It's close enough.
Okay. All right.
Yeah. All right. Here's another way to look at it in terms of in 2035, the percent of the valuation that's made up by each part of the business. The legacy businesses of energy and autos and services and other are in gray.
Right.
And the other businesses, the newer businesses in color, you can see what will matter by 2035. Again, based on my assumptions.
Yes.
All right. So we're going to throw all that out the window. We're going to say CERN doesn't know what he's talking about, but Randy does. Okay. Randy has his own channel. I don't. I'm just a guest on his channel.
Yeah.
Clearly, Randy knows more than I do.
Okay, if you say so.
All right. So here's what the model includes, Randy, just to set the stage for you.
Okay.
Okay. Everything in red is an existing business for Tesla that's included in the model.
Mm-hmm.
So for example, Tesla sells autos.
Right.
Tesla sells battery storage products. And the auto model includes the future revenues from future autos like semi, cybercab, Robovan, and next-gen EVs.
Right.
Okay.
Mm-hmm.
The model also includes sales of FSD, just FSD sales in the auto business.
Right.
So just keep that in mind for your margin expectations.
Mm-hmm.
I have a model for auto bidder. We're going to save some time and we're going to save you the brain work from coming up with your own auto bidder assumptions. We're just going to stick with mine because it doesn't really matter.
Okay.
Okay, we can safely actually exclude auto bidder and it's not going to make any difference. But that's in the model.
Got it.
All right, dropping down to services. Tesla receives revenue from zero emission credit sales,
Yeah.
regulatory credits. The supercharger network is in the model. Tesla has a insurance business that's also in the model, and services and other.
Mm-hmm.
Premium connectivity, it's in the model. Vehicle service and maintenance, that's in the model. Used vehicle sales, that's also in the model. Okay.
Yep.
And retail merchandise, the tiny, tiny part of Tesla's business, that's in the model too. All right. Then we get to the blue arrows, which is new businesses where there currently is really no revenue. Robotaxi,
Mm-hmm.
Optimus, and then the AI inference compute on EVs and bots.
Right.
Okay. So we're including a lot, but we're also excluding some pretty important things. And one of the big things that we're excluding from this analysis is licensing of FSD
Mm-hmm.
or licensing of Tesla's technology in general.
Right.
Right. So just want to mention that also we're excluding the selling of like EV charging stations to other companies.
Oh, uh-huh.
Okay.
Mm-hmm.
So there's a lot that's not included. Another
you're
thing
also
we're not including is Dojo as a service.
right. I was just going to say that.
Well, I beat you to it this time, and I have to interrupt you every time because you're always ahead of me, Randy. No, sorry, you're right on. And sorry for interrupting you
No, it's quite all right.
on your own channel. It's very rude of me as a guest.
It's
All
okay.
right. Are you ready?
I'm ready.
Okay. So here is kind of the framework for the auto model. And what I need from you is your expectations for EVs delivered out to 2035.
I see.
And it might be easier for you to tell me what you would change on here or however you want to approach it, Randy. Just
Okay.
tell me how you would like this to appear.
Okay.
In terms of EVs delivered, what would be your expectations?
Okay. And this is something you want me to do right now live?
I do. I'm putting the pressure on.
I see. Oh, golly Moses. Because I've got these things, on spreadsheets elsewhere.
Well, you can always send me then later after the show, but I would like your audience to kind of hear your thought process a little bit.
Okay. Well,
But if you want to circle up with me after we finish, then
yeah.
I can incorporate that.
So I'm agreeing with your 2024 roughly. 2025, I think it will be much higher. I think it'll be closer to 2.6. 2026, I think it will be probably on the order of at least probably closer to 4 million.
Okay.
2027 is getting a little harder and harder to figure out, but I would say conservatively 5 million. And after that, I would assume something on the order of 20% growth, because it gets really hard after that to figure it out. Because do they build more factories? Which kind of factories? What happens with the autonomous uptake by humans? Does everybody decide to go chauffeur driven, or not even chauffeur driven? Do they all just decide to start paying a monthly subscription to get cabs to pick them up wherever they're going, whenever they're going? So there's really this kind of unknown, I think, beyond 2028, where maybe they don't need to sell 80, maybe the world doesn't need 80 million cars a year anymore. Maybe it drops to 60 or 40, or maybe the usage goes up dramatically as the price per mile goes down, and you need more than 80 million cars. So there's a lot of there's a transformation, a zeitgeist transformation in the vehicular transportation business that makes it really hard to predict past 2028, 29.
I agree. So your 2027 number of 5 million, if you're growing from 20% there, you're going to end up with more than what I have in 2035. Because you can see I'm growing at 19, 16, 14, 12, and 11% in those out years.
I never had any trouble imagining Tesla getting to 20 million by 2030.
Okay.
It's really a focus.
Yeah.
If Elon decided tomorrow he wanted to do 20 million in 2030, assuming he could sell them all, but if he wanted to produce 20 million in 2030, I have no doubt that he'd be
Okay.
able to.
All right. Then in terms of average selling price, you can see I've got that going from, 42,000-ish this year down to 31,000 in 2035. Partly because, Cybercab is an increasingly large percentage of the vehicles sold. And then, of course, battery cost declines.
And Cybertruck dollar price average will come down. Yeah, I don't have any significant difference with you. I don't think I would quibble.
And by the way, this includes semi.
Oh, it includes semi. See, but semi, when I put semi in, I 5 times it.
Yeah. But yeah. And I guess if you wanted to, you could exclude semi if you wanted to in this analysis, however you want to think about it. But to make it more conservative, you could just say, well, I'm including semi in this.
Okay, there you go.
Right?
Sure, sure.
So are you comfortable with those ASPs?
I'm comfortable, and I'll use the semi as you just described it as a yeah, it'll be larger. My number will actually be larger than this, and this brings it down a little more real. Okay.
Okay, so we're making it a little conservative. How about net margin?
And people should, maybe I should just say again, and a lot of people on my channel know this. One of the reasons I think the numbers will be a lot higher is that I believe that the uptake on the vehicle itself will be greater when FSD is a thing.
Yep.
Not only because people will want the chauffeur-driven car, but also they'll want to put it out to work to bring them money. In addition, there'll be fleets that'll be buying it. And that's not just the fleets that'll be buying to put it out as robotaxis, but it'll be government fleets and police fleets and all kinds of other fleets that are not currently purchasing them. So I think Tesla will get to the production constrained point as soon as FSD becomes unsupervised.
Okay. Net margins, in my model, I'm assuming FSD is included, so margins go up from 15%. This is net, not gross, net margin. 15% up to about 20, because as more vehicles take FSD, that's a higher margin. Also, it reflects, Tesla's ability to cut costs and not have to give all that up over time. But what are your thoughts, Randy, in terms of the trajectory of net margins from now out to 2035?
So here's a big question. In net margins, are you including the continuation of the Inflation Reduction Act, the IRA, where the battery will be getting all this money?
That's up to you. This is now your model, so you tell me if it's included.
All right. And number two is I've always been a little curious, like, especially as you were just describing yours, where FSD comes in. Does it come into margins, or is the FSD a separate line item?
I've included FSD sales or subscriptions in my auto business valuation.
As a separate line item, right?
Well, but it's part of this model. So a separate line item, but
it's part of this model.
Yes.
Okay, so if it's included in here, no, my margins would be significantly higher. I would say that 2025 margins will be up to, say, 22%. And then 2026 would be up to maybe 25, 26%. And maybe it'll stall out there. Maybe it'll be another one of these Elon things where he feels bad making more than 25%.
And this is net margin, Randy, we're talking about, right?
Talking about net margin of the car itself, yes.
Yeah, car itself plus FSD software that's sold with the car.
Right.
Yeah, okay. Great. All right, that's excellent. Anything else you'd like to add on this part of the model?
No, I think I'm good.
Okay. Energy storage.
Okay.
what are your expectations for energy storage? I have 30 gigawatt hours deployed in 2024, going up to 3 terawatt hours in 2035.
To 3 terawatt in 2035.
Yep. So it's 100x growth in storage deployed in 11
Okay.
years.
And the only thing I might do 2025, 75 makes sense to me. 26. Yeah, I like your numbers. I wouldn't change these numbers.
Okay.
Yeah.
How about average selling price per kilowatt hour?
Price. Yeah. So we're right now at about 300.
I've got it going down by half over 11 years.
Yeah, it might go down by even more than that. Uh, I would, yeah, I
Take it
wouldn't,
down to 100?
as I'm looking at them, I would be hard pressed to quibble. It would just be quick. I think there's at least a pretty solid chance that the demand will go up substantially in the next couple of years, which may increase the cost of lithium and some of the other raw materials. Maybe they'll make it up in terms of productive capabilities and methods of making it cheaper. But overall, I wouldn't quibble with the numbers. Quite frankly, I would. I think we're close.
Okay. Yep. And how about net margin? I have 15% across the board.
No, I think that now that they've hit their 25 to 30, I think he'll be perfectly happy to keep making. And I don't see any reason in terms of demand versus supply why Tesla would ever need to make under 25 again. So why don't we pick 27?
But you're talking about 25 to 30 gross margin. This is net.
Net
This is after taxes, after SG&A, after R&D.
You're not taking the profits out after you add up all the gross profits.
So you take the gross profit and then further you subtract taxes, SG&A, R&D, other operating expenses of the company.
The related overhead and taxes, et cetera, to that division.
That's right. So if it's 30% gross margin, it might be 15% net.
Got it. Is that kind of how you're figuring it?
Yep.
Okay. Well, then
25 to 30 might be 15% net, maybe 20 net, depending on other costs.
if that's how you're doing it, we might have to rejigger the vehicle. If you're talking about that kind of net profit,
yeah,
I thought you were okay. So we probably have to rethink the auto as well.
Okay, so we're back to autos. You had 22 next year and then 25 and for the rest of the period. Would you like to revise that?
Yeah. So in that case, you're thinking that there's about a 15% on auto. Would you think 15% on auto for all those other things as you just did on energy, or is it less on auto?
Well, I have it growing on auto because of FSD as a contribution of profit becomes higher and higher as FSD is adopted.
But I meant the overhead and tax and whatnot.
Yeah, it's a similar kind of similar kind of ratio. Sure. Yep.
Similar kind of ratio. Then I would take whatever I just said and take that 15% off then.
Okay. So I'm sorry, 2022, you had 22%. Where does that get you?
So that would get down to 7. Well, that'd be 22 minus 15. Well, we're going to make more than 7%.
Yeah.
So maybe why don't we just for these purposes, let's just go with 12 across the board on that without having done a lot of research.
Okay.
Okay.
All right. You're making the numbers very conservative in my opinion, but that's great.
Okay.
Yep. Okay. Energy storage, then net margin similar or higher?
15.
15. All right. I think we're in total agreement on this one then. No changes to make.
Yeah.
I may get some sleep tonight after all. All right. Services and other business. As a reminder, this is supercharging. This is used cars. This is maintenance. This is everything else that Tesla currently makes money on.
Yes. And
Retail merchandise.
there's a couple of these that could spurt, like insurance, and then it could then go away.
Yeah. So just kind of factor that in. If it spurts, you can kind of ignore things that spurt.
Right.
If it's not going to persist. So
Right.
I have revenue here of 11 billion in 2024, growing to 100 billion, so a 10x increase, and it's kind of in line with the auto growth.
Got it.
In my model, I kind of tie it to the growth in autos, and since your autos number is a little higher, then I might also make this a little bit higher.
I would go with just a flat 50% per year growth. I think there's going to be a lot of growth in some categories, and there's going to be insurance in particular that's going to grow radically.
50% per year out to 2035?
Out to 2035.
Okay. All right. And how about your net profit margin? You can see I'm starting at 1% net going up to 10.
So you think 1% this year?
Yeah, the profitability right now of this business is very low, if at all.
Right.
Gross margins are pretty low. So I've got low margins now, and then getting to 10% 11 years from now.
Right. No, I think the profits are going to get up there quicker. So I would say by 27, I'm okay with your 1, 2, 3, but I think starting in 27, I would probably pop it up to like 10%, and then maybe for a couple of years, 29, 12%. Maybe then by 31, 32, let's call it 32, it would also be 15%. Because at some point, they're going to have all of the superchargers covered with solar. They're going to have what do you call it? Mega packs at each station. They'll be using those for arbitrage. Yep. They'll have all kinds of arbitrage situations going on around the world, and all of that right now is included in this service and others. So I see I see margins going up dramatically in this area.
Great. Thank you for that. Now, Robotaxi.
Yeah, boy.
So I have this tied to the EV sold, so it comes back to the auto business.
Yep.
And then I keep track of the cumulative number of EVs sold. So you can see by the end of 2025, my estimate is about 9.4 million, right? And then I start building up the autonomous fleet, starting at 50,000 for next year. And then basically it gets to about half of the cumulative EVs sold was my assumption.
Yeah.
So you can see by, 2030, 17, 18 million is about half of the 35, 36 million EVs sold.
Got it.
Okay.
So this is the Airbnb side, or I assume that you're including in this side also the fleets.
Yes.
So if Hertz or somebody does this, it would be.
It's also Tesla's own fleet. So it could
also
be
Tesla's own fleet you have in this mixed?
Yes. Yep. Robotaxi is Robotaxi. It doesn't matter who owns the vehicles, it's how many vehicles deployed.
Oh, because there's such a difference. It's like Tesla might be making 50,000 a year on their own fleet and only 10,000. I think I have it at 60,000. I think my number, I think I cut it in half just to be conservative. I think I had it at 30,000 a year for their own fleet and 9,000 a year for the if you will, the other people's fleets. So there's this vast difference.
Mm-hmm.
Yeah. So how to merge those? That might be one I have to give you overnight. I mean, give you later this morning.
All right. Yeah, I apologize to your viewers. I recognize that watching the food being prepped in the kitchen might not be the most scintillating video.
No, I think in fact it is, because it's showing how we're coming up with these numbers. And CERN, I would just encourage you to consider the possibility of splitting these two categories, because we're not talking about something that's easy to blend. If Tesla has if they're not seeing a lot of uptake, if it's less than my projected 5%,
Yeah.
they're putting their units out for to the fleets, then Tesla might decide to build more for their own fleet in order to take advantage of the opening. If a lot of uptake, a lot of fleet purchases, Tesla might decide to pull back a little bit on what they could do in terms of making for their own fleet. But there is also this profit difference, which would encourage them to build them for their own fleet. So there's a lot going on there, and
Yeah.
it's going to be hard to blend this. But I'll send you my separated numbers, and maybe you could figure out how to blend them, or you might choose to unblend them. I'm not sure.
I appreciate that, Randy, and you really don't want me to sleep tonight, so that's great. Thank you for that. All right. How about Optimus then?
Yes, Optimus. Okay, what are you starting with?
What are your expectations? Well, I have 1 last year, 10 this year, and then 1,000, and then 100,000, and 1,000,000, and then kind of growing, not by an order of magnitude after that, but just growing at some high rate.
Oh,
4 million in 2028.
Yeah, I like what you're doing from 26 on. And so it's probably at the high end of my expectations in 26, but I don't think that they'll sell any in 2025. So I would just eliminate the 2025, and the rest of it I could live with.
Okay, so 2025, you've got 0, and then you're starting in 26 with 100,000.
Yep.
Okay. And don't let me overly influence you. Please change these to numbers that you're comfortable with.
No, I had, quite frankly, who was it that I was talking to? Oh, it was Jeff the other night. He's more conservative than me, and he was saying 30 to 7. No, what was it? Yeah, 30 to 100 in 2026. So, I think that a normal ramp, close to an automotive ramp in the first year, but more, but after that, ramping much faster. So this is very much within what I would expect.
Okay. All right. That's great. Maybe I will get some sleep after all. So what we're going to end up then with is what I'm going to call the Randy Kirk Tesla valuation model.
Okay.
Right. And this will be your very own fully discounted model. You'll get a price that's equal to the present value of Tesla today.
Right.
Okay.
Then if only somebody would pay that much for my stock, I wouldn't. I guess I could do this for free. I could tell you
people will eventually come to their senses, Randy. It's just that we may be a little bit ahead of the curve.
That's right.
Yeah. So I think this will be an instructive exercise for you, for your viewers,
Sure.
to see the impact of your assumptions and then the impact of different probabilities on those assumptions.
Okay. All right.
So I'm going to work feverishly overnight to produce this model for you. I don't have a crystal ball, but I have some spreadsheets, and so we'll see what we come up with.
All right. Cool.
So that was a different show today, and I'm sorry I didn't end with more Cybertruck photos, but
no, and quite frankly, I had seen your what's it called? Not Las Vegas. Your methodology for applying different percentage chances and whatnot, and I was kind of hoping that we would do something around that. So good, yeah.
There you go. So it seems like I'm capable of reading your mind as you're capable of reading mine.
That's right. That's right.
Even though we're at opposite ends of the country.
Go ahead.
Yeah.
Yeah. I mean, ESP is an amazing thing.
It is. Yeah. Then maybe I should add that to Tesla's revenue list.
I mean, quite frankly, I was involved in and I'm pretty conservative on this kind of stuff, but I was a psych major, and they had an ESP experiment that I got involved with and attended 3 different sessions. The first, and it was really good. I mean, they had they had put you in a dark room, put slides up on a screen. Was it slides? Yeah, slides up on a screen and music in another room. I'm sorry, not in the room you were in. You're in a dark room. You're describing what you're seeing. And down the hall and around the corner, they're putting slides up on a wall and playing music. And you're supposed to concentrate on that and come up with, well, the first time, I think there was 5 each time, or 3, no, 3 each time. And the first time I had knocked 2 of them out of the park. I mean, it was so close, it was crazy. And the third one was not bad. But then the next time it was not so good. And the last time it was horrible. And they say that that almost always happens because people start to overthink it.
Yeah.
So ESP there might be something to it. Not sure.
So let me ask you then my final question. But before I do, I need to ask you two more things. What do you think will be the terminal rate of growth for Tesla's earnings beyond 2035?
The terminal rate.
What growth rate assumption would you like to include
Yeah.
in the model?
Great. Wow. Well, when
Strange term, but
well, and you get the law of large numbers and all kinds of things taking place here, but you've also got this optimist thing,
yeah.
which is just going to be, eating up big numbers. And then who knows, Elon could come up with something else, although it's hard to imagine what's going to be larger than the labor force. So I'm going to say that we should use 10%.
Okay. And what discount rate would you like to discount the future earnings back to the present? Another way to think of a discount rate is what is your required rate of return to invest in Tesla stock?
Right.
Are you happy with 12% a year? Are you happy with 10? Do you need 20%? What rate of return do you need in order to take the risk to invest in the company?
As compared to just putting them into bonds at 4.3 this morning.
That's right.
Well, you had a high number. You talked about it being a high number.
Yep.
How does a 100 PE turn into a discount rate? Is it 5%?
No.
No.
Oh, well, in that case, if it was forever, yeah, sure, 5%.
It'd be 5%, right?
No, sorry, that would be like 1%.
100 PE implies
Yeah.
a 1% discount rate.
Yeah. A discount rate of 20% would be 5%. Sorry. A PE
of 20.
PE of 20 would be like a 5% discount rate.
Inversion. So that's how the inversion works. Okay.
Yeah.
Wow.
Think about it in terms of earnings yield if you convert it into an earnings yield. So instead of PE, it's EP.
Yeah, that's what I was trying to do.
Yeah.
But that time I didn't have to just do math. I actually had to think of the the actual analysis too. Okay, so let's see.
Math is hard.
Math is easy. It's figuring out how to apply the math that's hard. Okay. Well, I think your number's too high. I'll just drop it a little bit. I'll go to 12.
Okay. Yeah, I had 14.
Right.
And it was a nod to our friend Gary Black, who used 14 in his model. So I used 14 in mine to make it conservative.
See, he's conservative. Yeah.
Yep. All right. Final question then. Given those two assumptions,
Sure.
given your ESP and your ability to think about the future, tell me what you think based on all your inputs that you've given me and you will give me tonight, further inputs, what the present value of Tesla is today. What's my model going to predict it will be?
It's on the 100%. On the 100%. On the 100% Randy.
Yeah.
And yours turned out to be?
Not going to tell you.
You're not going to remind me?
No. 3,400 was what I had.
Okay, so you are going to remind me. So mine's going to be higher, I think, because there was a couple of things I did that was higher.
Your discount rate's lower, but your terminal growth is lower too.
That's true.
And if you think back to the first part of this video where the terminal value is 50 to 70% of the...
Right.
Yeah.
Yeah. All right. Well, I'll say 3,000.
All right. We'll see how close you are to that.
Okay.
Other people in the comments, if you want to hazard your guess, we'll see who's right. And whoever is closest, Randy will send you something special, I'm sure.
How about a Cybertruck?
Cybertruck. I'm good for that. If you send me a Cybertruck.
Bottle opener.
Oh, okay. Sorry.
I was pointing. Where is the thing? There it is.
There it is. Yes. No, those are fantastic. I have one and they're amazing. Everybody should buy one.
They should. They should buy multiple. They should buy 5 or 10 to give out as Christmas gifts right now. Send the
Instead of
order.
wrapping my Cybertruck, I should just cover it with the bottle openers.
There you go.
So Randy, if you could send me about 2,000 of them, that would be great.
2,000 bottle openers. There you go. All right.
Yeah.
Surely we'll do that. Right.
All right. Well, I think we've had all the fun we can handle for this show. Thank you for everybody sticking with us. But tomorrow we will reveal the results of the Randy Kirk test evaluation model.
Yeah. All right. We'll see what happens with that. Thanks, Cern, as always, for amusing us and sometimes even instructing us.
Occasionally.
All right. And we'll see you tomorrow. And to all of you out there, it's been great talking to you.
Thanks, Randy.